Awesome. Okay, well, I think it's 12:02, so I think we can get started if that's good with everyone. First off, my name's Jonathan Halverson. I'm the Senior Manager of Development and Marketing for the Roughrider Foundation. Thanks so much for everyone joining us today for our flow through shares and federal tax changes webinar. Got some really exciting stuff for everyone to learn about today. Obviously, some big changes and implications in the tax process and flow through process, which Peter from WCPD is going to chat about a little bit more later on. But for just starters, I will share my screen and we will get the presentation going. There we go. Okay. Awesome. Looking all good for everyone there? Good stuff. So, like I said, welcome everyone. First off, just gonna throw it over to the South Saskatchewan Community Foundation to Jonah to chat a little bit more about legacy giving.
Yeah, thank you so much, John. So the South Sask Community Foundation, we're happy to be a part of this webinar. We've been around for 55 years now as a trusted partner in the community for folks that are looking to leave a legacy. And we've been built by a number of families that have wanted to keep their name alive in community and to be strategic through their giving and create funds through the foundation. So essentially, we can help as a private foundation without any of the back end work. Thousands of donors have been able to participate through the foundation, and we've been honored to be stewards of that philanthropy, stewards of that giving, and really support the quality of or building the quality of our communities both today and in the future. So in the past 55 years, the Community Foundation has granted out over $60 million to hundreds of local charities, including the Roughrider Foundation, through, in large part, these endowment funds. And essentially, for those unfamiliar, a quick kind of overview of the concept is the donations come in through the foundation, establish a fund that can be in your name or your family name, for example. That donation is forever protected. You get the tax receipt and the principal's forever protected. It's the investment earnings every year that go back to charity and go back to the causes that you choose to support. So it's an incredibly sustainable way to make an impact in the community, to leave a lasting legacy, and to have an enduring impact. Instead of a one-time donation to the causes and charities that you care about, it's a forever donation. And it allows you to do a directive giving. There's opportunities for families to be involved in making some granting decisions and things like that. And above all else, it's about the sustainability of it. From the Community Foundation perspective, we're trying to build communities throughout Saskatchewan that are enriched with opportunities for folks to really be part of our communities and to support kind of thriving communities for all. And the sustainability through endowment funds, specifically through legacy funds, helps to support these organizations that are so critical to our community life and provide so much vibrancy to our day to day. And so through the Community Foundation, we're happy to be those stewards that help to contribute to a brighter tomorrow, that help donors like many of yourselves to make an impact, not just today, but long into the future. And John, if you can go to the next slide.
You betcha.
I think one of the most beautiful pieces about this is the long-term impact, is that we're not just talking about donations today and kind of impact in the next 6 months to a year. The idea of legacy funds is that the impact continues to grow over time. And so this beautiful graphic uses our actual fiscal data from our historical data from the past 15 years, including fees, including investment earnings, and management fees on those investments and things like that. And this just highlights what the potential impact of a one-time donation of $100,000. And so this is a donation of $100,000 to establish the fund, no further donations. And you can see really after, say, 25 years, that middle tree, The fund has granted out now over $112,000, so more than the initial donation itself. And the fund balance would sit at about $164,000. And so not only are you creating more impact than the initial donation and continuing to be able to grant out and support the causes that you care about, but as the fund continues to grow, the amount of granting continues to grow too, keeping your name alive in community and just making an impact for generations and generations to come. So the Community Foundation would be happy to be a partner with folks looking to create these legacies in community, to be strategic in their giving, and are happy to have conversations with those that are interested and help to create these legacies and support our communities in this such a beautiful and sustainable way.
Awesome. Thanks so much for that, Jonah. Well said. Now I'm going to introduce Cindy Fuchs, our Roughrider Foundation Executive Director, to chat a little bit more about our foundation, what we've been up to, and some really exciting things. So, Cindy, over to you.
Thank you, folks. So I'm thrilled to be able to offer a little bit of insight into the Saskatchewan Roughrider Foundation, which is the charitable arm of our football club in Saskatchewan. So we have three pillars. One is amateur football. So we support amateur football throughout the entire province, which includes our university teams, our junior teams, female teams, as well as certainly our Northern Sask Football League, which will be hosting about 220 youth from Northern Saskatchewan next week, and kids sport, and then also Football Saskatchewan. So anybody that their child plays football, we have an impact in terms of our funding to support that with them. The other pillar for the foundation is mental health or health. And that's the second pillar. And our health programming, which we have a lot of our own, is you can see on the screen that we have a number of players, about 5 or 6 every off season, that go to schools and deliver mental wellness to students throughout the entire province. This past couple of years since we launched this Win with Wellness program, we've reached about 22,000 youth. Traveled many hundreds of thousands of miles. I haven't, the players have, and delivered fantastic, important messages to youth who are struggling with mental wellness throughout the province. This is a curriculum aligned program, and we go to every school throughout the province, including rural, private schools, Indigenous schools, and public and separate schools. And so we love this program, and it'll continue to grow for grades 4 to 8 throughout the province until we've reached all the grade 4 to 8 students. And then we'll cycle through again and continue to use this program. This program is heavily funded by individual donors, and many of them through flow-through funds or through the South Saskatchewan Community Foundation, our non-endowed fund. Our third pillar is our education pillar. And our education pillar, we offer a lot of scholarships to university students and Polytech students in the province. But most importantly, we have our own reading program. And you can see Mitch Picton on the screen. He's reading Pete the Cat. This is for a program that we launched this year, K to 4. And we actually have been doing reading in schools for many, many years. But the last year, and we'll move on into next year, we've really revamped the program to align with curriculum and have literacy outcomes. So just a little stat for all of you that are listening, the literacy levels in Saskatchewan are extremely low. And as a matter of fact, if you don't have, or if a child does not have grade 3 literacy levels, by the time they reach grade 3, they have the chance of them graduating is reduced by 40%. So that impacts our businesses, our industry, our future of our province. So we really think that the opportunity for our riders to encourage kids to read and read to them, and then they also share a little bit about how important reading is to them as well, will have an impact in the future of our province. So those are our 3 pillars. We have a number of partners that we work with that are provincial in nature, but for the most part, we really rely on corporate sponsorship, individual donations, and of course, legacy giving for our 3 pillars. And our players, one of the key things for our players, and this is for those rider fans out there, is that we are able to keep players in our community and in our province because we get to employ them in the off season. So it makes them a better player, it makes them more of a team player and part of our community of Saskatchewan. So thanks, John, for letting me share a little bit about the Ryder Foundation.
Absolutely. No, always good to share the good work that both of our foundations are doing. So thank you, Jonah and Cindy. Before we introduce Peter, I'd just like to give Wayne Poprovsky a chance to speak. He has some experience doing flow through. Wayne, if you wouldn't mind just introducing yourself and kind of sharing a little bit about what your experience has been with the flow through process.
Sure. Thanks a lot, John. Yeah, my name is Wayne Poprovsky. I'm a tax partner at MNP in Regina here, and we were introduced to WCPD probably about a year ago now with their flow-through offering and the critical mineral tax credits in Saskatchewan. Kind of brought them to the province in a little more at the forefront. We had spent a fair bit of time reviewing and analyzing the arrangements that they've proposed, which you'll see right away from Peter, are pretty interesting. They've got a long history across Canada. So we spoke with colleagues and other offices who've had a longer tenure dealing with them. And, the result was a number of partners and clients went into the program in 2023. And what I can say for that, in that experience, is that it's an extremely smooth process. Communication and the timelines that it takes were all exactly what was laid out in front of us. And the follow-up, having just finished all the tax reporting in the last couple of weeks, any follow-up or things required were handled extremely timely, and they were very helpful. So it was our first year running through it with them. I suspect most, if not all, of the participants last year that we were involved with are probably going to do it again. It really helped their philanthropic efforts become more cost effective, or it increased what they were otherwise probably going to donate.
Fantastic. Well said, Wayne. Thanks so much for that. Now, finally, I'd like to, first off, Peter, I'll let you take over sharing the screen here. I will stop sharing. But I'd like to introduce Peter Nicholson with WCPD, who's going to share a little bit more about kind of why we're all here today and just learning about the flow through shares process and starting off with a bang, because we're at a critical point in history. So Peter, over to you.
Right. Okay. Well, thank you, Jonathan, and thank you, Wayne, for that kind introduction. I'm Peter Nicholson. I'm the president and founder of WCPD. It's the acronym stands for Wealth Creation, Preservation, and Donation. We've been in business since 1987. We're based in Ottawa, but we work all across Canada, and I'm proud to say we put a lot of effort into Saskatchewan last year. What I'm about to share with you today really came about by a provincial tax law change where Saskatchewan wants to improve the critical minerals and offered a very generous, actually top in Canada next to Quebec, 30% provincial credit, but you have to be a Saskatchewan taxpayer to use that. So we're happy to start bringing this product into Saskatchewan. It's been around a long time, 18 years, but unfortunately, most of the Saskatchewan flow through prior to that was being sold in downtown Toronto, maybe a little bit in Alberta, and we want to stop that. So that's my general theme. My theme today is not to really, get into a lot of confusion for you. I want to share a lot of slides, but more to motivate you, to get you excited so that we can be introduced and talk to your accountant. And if your accountant isn't that familiar with this process, of course, we could bring in MNP and Wayne and others. And we also will pay for the accountant's time on this file, whether you buy or not. So it really is a no risk offer. And I think for those on this video webinar, if you're into philanthropy, this is the right structure and product. So let me just get right into it. You see the covering page right now where you see an electric car. What you're going to learn from this presentation is with one check, one investment, you're going to be able to help Saskatchewan's economy, help jobs, help basically find more critical minerals. And in addition, the final step, the final tax policy will be to help your charities. And that's why it's so tax efficient. We're getting 2 tax deductions on the same dollar. And the other huge benefit is you're not going to take the stock market risk. For those that know flow throughs, there's a reason why the government has been offering the 100% tax deduction for 70 years. They're 3 years older than RSPs, and that's because they're very risky. Exploration usually has a 10% success rate, 90% failure rate, but the government gets 10 out of 10 times jobs, and indigenous jobs, northern jobs. So that's why they've been doing it since 1954, which is 3 years older than your RRSPs. If you were to make, let's say, $300,000 of income and you bought $100,000 of flow-through shares, if that was the right fit for alternate minimum tax, which is the maximum you can buy based on rules that we can calculate with your accountant, your income would go down to $200,000. So it's really a super duper RSP. But the huge advantage our firm came up with, and been doing this since 2006, is that you can sell that risk, that volatility, because these are small companies that go up and down depending on whether the success in the drill bit, but we can immediately sell that risk to what we call a liquidity provider. That's someone else's, an institutional, usually investor, a Royal Bank Resource Mutual Fund, AGF Resource Mutual Fund, maybe Eric Sprott, that understands mining and will take those volatile stocks of flow-throughs off your hands immediately, 1 second in time, as long as you sell it at a discount. So the one thing I want you to remember about this slide is this is the GIC of tax reduction. This has been a policy in the code that probably will be on for another 70 years. And the reason why is we're better at mining than we are at hockey. And most people on this call, if you bring that home to your friends and family, they would get that wrong. They would say we're in anyone in the world. But the truth is we are outstanding at mining, and Saskatchewan is one of the best places in the world to mine as well. Government policy. This is on the side of the angels. Christian Freeland, back in 2022, it was so important for this government, and I think future governments, to solve this crisis we're finding in climate, this extremes in climate, to find more critical minerals. And Canada is absolutely blessed with them. So they offered more tax credits. Saskatchewan came up with a 30% credit. That is so significant that we don't want to sell Saskatchewan flow through to anyone other than Saskatchewan taxpayers. It's going to take us several years to build up this business because it's new to Saskatchewan high taxpayers, but we've already made a very good dent. You'll see we had 50 new clients last year to participate, and Wayne and some of his clients and partners were part of that. And Manitoba made it permanent. They had tested a 30% credit about 5 years earlier. So what I want you to remember from this slide is this is not a tax loophole. This is something that the government wants more of. And here we are with Jim Reeder. I met Jim. He wants more Saskatchewan people to do this. Again, there's a lot of writing in some of these slides. We'd be happy to send you a copy so you can really take your time and look at the words, but I'll just paraphrase it. I mean, they want more critical minerals. That's why they did the 30% credit. They want some more Saskatchewan people to do this structure, and they want to double the critical minerals in the province. You're well known across the world for potash and uranium and helium. But what people don't know is that how strong you are and will be in lithium, copper, zinc, rare earths, nickel, and cobalt. So you've got a real cornucopia of what the world needs. Last year, we did 55 million. That's our firm. There's three other competitors based out of Toronto. To our knowledge, we're the ones spending the most time. We've been in Saskatchewan right from day one. Between my vice president, Paolo, and myself, we did 12 trips in literally 6 months, 7 months after the tax laws changed. And became, an honorary Saskatchewan person, I would say, both by making some strong donations to the riders. I was able to give 48,000, as well as to the Saskatchewan South Community Foundation of $10,000 as a sponsor. So those are some of the companies we dealt with. We had our first SAS deal that was sold out from just our waiting list. For those on the video, again, my goal is, and my team is, to talk to your accountant. This is very much a detailed tax accountant, WCPD type of discussion. We're here just to motivate you to make that introduction, and then to get you on the reserve, because there will be advantages for people to buy before the tax laws that just happened in the budget come into place. Again, 7.5 million or 14% of that 55 million, that would be up from zero, were placed in Saskatchewan hands. And I'd like to think that we could probably, just from referrals of the 50 that went through and had a great experience, like Wayne mentioned, that we could probably double and maybe even quadruple this number, with the all-time goal is being, we want it all to stay in Saskatchewan. Because what tends to happen is the 55 million still went to Saskatchewan economy, and that's okay. But unfortunately, a lot of that, the remaining 86% went to Ontario taxpayers and a little bit of Albertan. We want that to stay in Saskatchewan, to reduce the taxes of our Saskatchewan friends. And in addition, if you're selling it to an Ontario person, they tend to choose U of T, Sick Kids, other charities that will help the communities of Toronto and Ontario. We want to help the communities of Saskatchewan. So that's our goal. And I think it is definitely reachable because the product is outstanding in your province. Federal budget. Well, here's what happened. There's been two main changes to impact our flows. One is, and we were expecting this, alternate minimum tax. This is kind of, think of this as the maximum you can buy. An RSP right now is a little over 30,000. Well, we knew that the government wants the wealthy to pay, what you've heard of again and again, to pay their fair share. So they've actually taken a broad stroke to reduce, if you borrow money to invest, that would hit alternate minimum tax. If you make donations, if you buy flow-through shares. So they've dropped it from 30% down to 20%. We are discussing with the government because that does disincentivize our ability to raise more for critical minerals. They weren't aware of that finance. So they did take our meeting last week, and they also talked about the capital gains. So there is a chance that we could get them to change this specifically for criticals. But let's pretend for this video that it absolutely is a 30 to 20. Okay. And that's still a big number. If you're making, $300,000, that's 60,000 that you can buy this structure, way bigger than RSP. Point two, everyone's been talking about this. This is the increase from 50% capital gains immediately from $1 for trusts and corporations. And for individuals, they did give us a little bit of reprieve, and that we don't have to pay that 66% capital gain unless you have more than 250,000 of capital gain in any 1 year. Our experience has been clients don't have usually 250,000 of capital gain, but it's lumpy. They might go 3 years with very little or no capital gain and then sell a business, sell some farmland, sell whatever, and then bang, there might be $1 million, $2 million, $3 million. It's also important to know that if you had a $300,000 capital gain after June 24th, the first 250 will always be at 50%. It's only the remaining 50,000 that comes in at 66. So you get a blended type of rate. Now, what's unfortunate for us is flow-through shares are all capital gains. So that 66 definitely does hurt us after the 24th and gives us a planning opportunity for those on the call to take advantage of it. So action A, what should we do with this knowledge? Well, any corporation that has passive income, that's what our focus is, to make the flows work really well. There is specific fact pattern. There is complexity with a corporation buying the flow through. So it's really important that we discuss the fact pattern with your accountant to see if you qualify for your corporation. First, you have to have that interest, rental, dividends, capital gains. It's all taxed at 50%. And if you do fall into that, you should definitely talk to us, and we should take a look at it before it moves to 66. So you can take advantage of all the buying, all the selling now at 50, but come June 25th, it's moving to 66. Action B for individuals for 250. If you're planning on selling a lot of capital gain after, in the last half of the year, and you're going to pierce through that 250,000, then we should look at buying some flow through shares before then. Alternatively, like most of our clients, they're not going to hit the 250,000 of capital gain. That means there is no rush. You can buy your flows if you like this structure in the summer or the fall. We definitely recommend not waiting until November and December. It's hard to find the product, and the product does get more expensive. Because we'll go into a little greater detail of a three-legged stool and how we get rid of that tax risk with the liquidity provider. And action C is just a general statement that you don't just sell assets and prepay tax unless you want to sell assets. Okay. I wouldn't go out and sell the cottage because you're going to save from 50 to 66 on an inclusion rate. I'd sell it if you really were planning to sell it in any event, if you're planning to sell those stocks, because depending on your assumptions, what accountants are coming across for our desk is 5 to 7 years. If you plan to hold an asset for longer than 5 to 7 years, then you shouldn't try to look at taking advantage of this opportunity. Okay. Again, probably talking to your own accountant and financial planner is the best way to take advantage of what those tax laws changed. This is a slide that just states about where we've been in the last 18 years. This is a structure that has a very long track record. Another reason why it's so safe. It came about with a tax law change in 2006 when you donated public shares. You wouldn't have to pay a capital gains tax. That's still the same case for public shares with the exception of flow-throughs. And just with this flow-through structure between myself and our competitors, we've done over $1 billion of donations. That's a significant sum. 9 advanced tax rulings. Your accountant will like that. And what I'm more proud of is 8,000 corporate and personal charity tax returns filed with no CRA issues. Okay, that's a very enviable track record. A little bit of testimonials. Again, you don't need to be a billionaire. The Saputos are worth about $9 billion. Patricia and Steve Greenberg, these are private citizens. They've gone public, and we have many, many more testimonials you'll find on our website. They've gone public because they want more people to do this structure. This is a slide, a lot of detail again. If you take a look at when we send you our PowerPoint, all that's meant through this is too many people are doing number one. Too many people just write a check. They write a check to the Riders Foundation. We want you, especially if it's going to be over $5,000, that's kind of like my line in the sand. If it's going to be a significant donation, it's worth talking to your financial advisor about donating low adjusted cost-based stock. That's stock that has a big capital gain because you won't have to pay the capital gains tax when you pay to charities of your choice. I did the math on the far right-hand side for you. A lot of our clients just have stocks that double. That's still very good. You save 12 cents or it costs you just 38 cents to give $1. 27 cents for the 10 baggers, and it doesn't get any cheaper than 25 cents. That's the best deal if you founded a public company. And the range depends on how big the capital gains tax. Now, you can also use our structure, and we highly recommend it. If you do have low ACB stock, 0.2, we can add a buy-sell of our flow-throughs that just decrease your tax, and we can get those donations down to our famous 1 cent deal. Most of our clients give 100,000, for example, and it costs them $1,000. And the Saskatchewan numbers are so good. I think the highest that we go is not 25 cents, but more like about 15 cents. And it's mainly because of that provincial credit that the Sask party put in. And the last point for a lot of our clients, they don't have any public stock. They don't like the stock market. They own their private companies. They own private land. And if that's the case, then you'd want to take a look at just our pure flow-through structure for our charity, for the most tax-efficient charity donations. This is a closing document. If you go to our website, we've got a coins presentation that would just add even more slides, and I wanted to cut it down. But simply put, this is how our deal works. Think of this as a 3-legged stool. We need a mining company in the Athabasca. Let's say it's Atha Energy, like the one we did last year, and probably do them again this year. They want to drill, and their stock is trading at $1.25. Their regular public stock, you can get flow-through share, can get a premium. Now, flow-through share stock becomes regular common stock 4 months later after you hold it, and that's a Securities Commission issue. So the client will write a check for $1.50. In the closing table, Atha will come. In the real world, it could be $15 million, but they're done in slices of shares of $1.50. The investor donors, people on the call here, you would come up with $1.50 of cash, and you would send that 0.2 up to Atha at the closing table. This all happens in 1 second in time at Faskins, our law firm. And then Atha would go up north to drill with it. Then immediately with our stock, we would pre-sell it. We would let you know who the seller is, who's going to buy all that risk from you, and why are they going to buy it. So you'll know all the particulars well before a closing of who the mining company is and the liquidity providers. Now, we generally have to give them about a 30% discount because they're going to be taking on this very volatile stock. That's negotiated. Sometimes it might be 90 cents, sometimes it's $1.10, but consistently, this is fairly reasonable. And that liquidity provider will give us $1 immediately. That would be the Royal Bank Resource Fund, as I mentioned. And 0.5 is that's yours. And in advance, you would tell us, hey, we want to give so much to the Rider Foundation. We want to give so much to my donor advised fund in the South Saskatchewan Community Foundation. It's always your choice. You've got 82,000 charities to choose from, and you'll get another tax receipt for that. Now, and the reason why it's so safe is if all three parties don't show up at the closing table, then we don't close. But we've always closed. We've done almost 700 of these transactions. They take a long time, several months in advance to negotiate. Now, just to quickly go through the math, because I'm not sharing you the coins presentation, that $1.50, and just assume 50% tax deduction. We're going to forget about the federal credits of 30% and the provincial credits, but that would save you 75 cents. Think of that as the first tax policy that creates the jobs in Saskatchewan, helps the economy. The second policy is that $0.5 of cash. When you give that to charities of your choice, you get another tax deduction. So that's what makes this so powerful. And that will save you 50 cents because you're at the 50% marginal rate on a dollar. So add 75 cents from the first policy of jobs on the $1.50 flow, plus the 50 cents from the charity. That's $1.25 of tax savings. And you wrote a check of $1.50. So it only costs you 25 cents to give $1. And this is rounding up. It'll probably be more like 15 cents in Saskatchewan. And the other way, how do we get to a penny, is you don't have to give that $1 to charity. You could write another $1.50 check. So in total, it was $3. But on 0.5, you keep that $1 for yourself. And when you keep that $1 for yourself, you get the 75 cents tax savings on 0.1 plus the $1. That's $1.75. And you can walk away with a 25-cent profit because you only wrote a check for $1.50. When you combine those two checks, $1.50 for donation, $1.50 to make a profit, 25-cent cost to give $1, 25-cent profit, that's when you get that great 1 penny deal. Okay, so that's just the concept sale, but we'll show you, and your accountant would like to go through our existing cash flow sheets. Pictures are worth 1,000 words. And this is the one slide I think is the most powerful thing for you to remember about this presentation. We just chose someone that makes $300,000 a year. You made $900,000. You just triple these numbers. And this is after your accountant. She's done everything she can. She's given you a trust, maybe a corporation. She's done income splitting, and you're still left at $300,000. You're going to pay $113,000. And that's all in red because pretty well every one of our clients feels that the government isn't that efficient with that $113,000. So we want you to file a philanthropic tax return. That's going to be, you're still the government up to alternate minimum tax. That's the maximum you can buy. The government still gets $29,000. That's the lowest we can give to them. $41,000. That's the cost of the flow through shares. When you buy it high and you're going to sell it low. But that money, a lot of our clients love that in Saskatchewan because it's going to go to jobs. It's going right back into Saskatchewan. And what's really important to them as well is the $43,000 would go to charities of your choice. That's 38% of your tax bill going to charities of your choice, not to Ottawa. Now, the numbers are identical. This is the penny deal. So how much excitement is it to basically be able to help Saskatchewan to the tune of $83,000 and take it away from Ottawa? And I'm based here in Ottawa, and now you have a friend in Ottawa. I can guarantee you that money is better served on the right-hand side of the return rather than the left. And this is your legal right. You're just signing a different tax return, and love to go through this with your accountant. This example is just, again, a picture of the old-fashioned way. Remember, 80% of major donations are write a check. That's 136,000 versus our way is 113,000. And we can actually share with you the 4-page tax returns where this came from. So it actually saves $23,000 by doing it our way. You could give more, or you can keep that pocket of savings. We're not going to go into much detail on this. This is just what a cash flow sheet will look like. Remember when I talked about that penny deal and you split 2 checks? Well, to get $100,000, you've got $218 going to charity and $114 to bring that profit, so that we bring that check from 15-cent cost to give $1 to a penny. How do we get paid? Well, we get paid by basically charging a fee. So when we talk about a 1-cent deal or a 15-cent deal, that's always after our expenses. So the $33,000, that will actually, and I'm going to run out of on my headset here, Nisa, is going to run out of battery soon. It went by quick. Sorry about that, folks. We got a little maybe technical. If I'm going to lose this, then I might have to go to this telephone. But in any event, 33,000 that pays the investment bankers, the lawyers, the accountants, and ourselves. So all the professionals are paid. 100,000 goes to the donation. The 114 check that goes to see it sold to the liquidity providers for 69,000. We don't have to collect any fees. So that's a good example. The 218 being sold at a discount for 133. That would be to the Royal Bank, Resource Mutual Fund, and then there's no stock market risk. In conclusion, you wrote a check for 333. You got $69,000 of cash back. It means you're out of pocket 263. But you got 262 of tax savings. Again, this is a lot more detail. Your accountant will love that. And there's more pages that goes through each one of those deductions. We even have a corporate deal available for you. So this would be passive investment income, same thing as individuals. Again, we won't go into the details in this conversation, but again, happy to go through with your accountant. Just in conclusion, well, when you're purchasing flow through a liquidity provider, it's going to help junior mining companies extract minerals and save the planet. You're also going to create jobs, help Saskatchewan. And then the last point is increased size of donations. At this point, there's only one tiny tax risk in our deal because you don't have any stock market risk. And that tiny tax risk is that the mining company, and we indemnify it, they have to spend it exploring. And they know that. We've done over 700 of these deals and over 400 of risk deals where you don't sell it to the liquidity provider. I've only had to deal with that 17 times where the mining company doesn't spend it right. And then the indemnification kicks in and they have to pay us back in 20 days. So this really is the GIC of tax reduction. And just to finish off, what's the next state with some pictures? That's Miami. If we get the seawaters, if we can't fix climate change, Miami's underwater, New York City's underwater. This is where potash is so important. The food supply, the droughts, the extra rains, they're going to need Saskatchewan potash to help. We've seen the wildlife. We've seen problems with the Alberta forest fires and coming to Saskatchewan. This was an Australia picture. Again, this is a major, major issue in our world. There is no path to low carbon without these critical minerals. That's why the government wants you to do this. And then the last point, which is also a big problem in our world, is the wealth gap. And that's where these charity donations will help so much. 26 of the richest people, that would be Gates, Buffett, Musk, have the same net worth as 3.8 billion people. They need to start sharing that. And people on this call that have done quite well, we need to share, myself included, the good fortune and share it with charities. That's it for now, and we can open it up for questions. And this is any questions that we have?
Perfect. Well, thanks so much, Peter. That was fantastic. We can wait here just for a couple minutes or a minute. If there are any questions, you can use the chat box if so. But like we said as well, the fact that you RSVP to this, we will be sending out this recording of the webinar here. So you can rewatch it or look over things again. And then Peter and team, I know, will be happy to answer any questions too for a follow-up as well if you don't have any questions at this moment.
Yeah, it's not unusual. When you get hit with this much information and it looks too good. I can just say this. A lot of people over the last 18 years says, Peter, this looks too good to be true. I can assure you this is absolutely true. And the government wants you to do more of it.
Absolutely. Well, I think, again, not seeing any questions in the chat right now. So unless Wayne, Cindy, Jonah, if you had anything else to share or say, I think that that about does it for us. Perfect. Okay.
Thank
Well,
you.
thanks so much,
Well,
everyone.
I was just going to finish off, Jonathan, that it was the clients that did work last year of the 50. I'm happy to say 100,000 went to the Saskatoon Community Foundation. 120,000 went to the South Saskatchewan, and I think 10,000 of that was one of my sponsorships. But a significant one of our clients funded their donor advised fund. And then lastly, we went over 100,000 of the riders by using this structure. So very happy. And that's just the beginning. I think we can absolutely put a multiple on those numbers in 2024 and future years.
Absolutely.
And John,
Okay.
you have to wrap up every webinar with Go Riders.
Of course we have to do that. Well, Peter's
Yeah,
doing my
yeah.
job for me. He's got a great
Yeah,
shirt on
yeah,
right
well,
now.
I get
Yeah.
absolutely, absolutely. And this will be repeated again at 5 o'clock. There'll be a better presenter, my vice president, Jeff Todd. So I'm the warm-up act for Jeff and the rest of the team. Unfortunately, I'll be on a plane somewhere else. But anyway, really appreciate this opportunity and really look forward to really building the business and helping Saskatchewan people save on tax.
For sure. Well, thanks so much again, Peter, for sharing that today. And thanks for everyone joining the call. And yeah, like Peter said, we will be doing this again at 5 p.m., but also be sending out the recording as well. So looking forward to hearing from you.
Okay. Yeah. Bye-bye.